Hello everybody, welcome back to Market Insights with Linux, and welcome to this new video in which I wanted to talk about interest rates. Very exciting, I know, but at least very important. Alright, so I wanted to talk about that because today we again saw Donald Trump lashing out a little bit at Jerome Powell, so I just wanted to touch upon that. And then, talk about what type of effect that has on the markets and also a little bit down the line, right? Because it seems unlikely that interest rates are going to be cut anytime soon, maybe July. We'll talk about that a little bit later, but ultimately, we have seen in the past, or at least in the last couple of weeks, that whenever there's this tension between Donald Trump and Jerome Powell, it can have an effect on the markets as well. So we'll talk about that. Pretty sharp decline in the move in the S&P 500 right here in the last last hour or so. So maybe there's some news going on while I'm making this video, but that is something I will find out after the video. All right, but what happened today is the following. All right, Donald Trump said if too late at the Federal Reserve would cut, we would greatly reduce interest rates, long and short, on debt that is coming due. Biden went mostly short term, okay. But then there's virtually no inflation anymore, but if it should come back, raise rates to counter. And before that, he also said, too late at the Fed is a disaster. Europe has had 10 rate cuts. We have had none. Despite him, our country is doing great. Go for a full point rocket fuel. Now, first of all, and stuff like this has been going on for a longer period of time already. First of all, it's not amazing in terms of political stability, right? But political stability, talking about the markets, like, does that really matter that much for market performance? I think on the longer time frames, no. So that is something, if you're a short-term trader, that's something to be aware of, and that's definitely something to take into account. But long term, this instability doesn't really matter. What does matter, of course, is if this actually has some sort of an impact. But first of all, look, what he's saying right here about the inflation rate and that Europe has already done 10 rate cuts. In my opinion, if you look at the economic data, which I haven't looked up, but I follow the US economic data every single day. If you look at the data, like, yes, the inflation rate has come down a fair bit. But the Federal Reserve wants the inflation rate to be under 2%. At this point of time, that is not true, right? And when we're talking about Europe has already had a longer period of time where inflation rate was near 2%. And I think earlier this week, we actually got a reading that it's below 2%, all right? So it makes sense that the ECB has already cut rates more often. I think the EU has also had a little bit more reason to cut rates in terms of the potential economic troubles, and the US is still doing fine, right? I mean, if you take a look at the employment data, if you take a look at other economic measures, the US economy is still doing fine, while the inflation rate is still a little bit too high. So I guess you could say that he should have cut rates already a little bit lower, but there's no acute reason to cut the rates already. All right, that's personally what I think about that, and it's obviously not true that there virtually is no inflation. There's certainly categories where the inflation is very, very low, but ultimately the general inflation, the core inflation, is still above 2%. But all right, so then the question is, will we actually see lower interest rates, which is obviously good for the markets? At this point of time, no. For June, it's a 99% chance that we will not get rate cuts. For July, it is a possibility, right? But then the main things that we have to watch is the economic data. And we have the next FOMC meeting, the 18th of June. It also matters if we actually hear something by Jerome Powell about this political pressure, right? So far, we have not seen that the Federal Reserve cares about the political pressure that Trump is putting on them, not in their words, but also not in their actions. So if that changes, that could potentially also have a positive effect on the markets. Long term might have a different effect, but short term, I do think the effect would be positive, right? So if they in the next meeting, if they'll talk a little bit more about potentially cutting rates, potentially in the 30th of July, but also for the rest of 2025, that will have a bullish effect. And then outside of that, very boring, but it's just about economic data, right? Do we actually get economic data supporting more rate cuts? We'll see bullish price action. If we see economic data coming in that is not supporting further rate cuts, we might not even see rate cuts until October, right? Because at this point of time, the target rate is 1 rate cut in September. But if the circumstances change, and if the economic data coming out potentially because of the tariffs is worse and is suggesting that there's going to be more inflation, we could also see 1 rate cut for the entirety of this year, which is very different from last year when we were expecting 4. But yeah, I think that's what you need to know right now regarding this feud between Trump and Jerome Powell. I'll definitely keep you updated on this. Personally, I mean, yeah, interest rates are kind of boring, but they're incredibly important as well. And therefore, I keep an eye on it very, very much. So for now, I think that's what you need to know. If you do have any questions, of course, let me know down in the comments. But for now, thank you for watching. Take care and bye.